What are the requirements for getting a mortgage? We look at, as mortgage professionals, four different categories. Okay, we call them the four C's of lending: credit, capacity, collateral, and capital. Okay, so it's basically credit, income, collateral, which is the house, and your assets. I'm going to do super high level here because in additional videos, we're going to break it down a little bit further. So, credit, right? Credit is a huge question. And I get this all the time, like how to buy a house with bad credit, things like that. Here's what I'm going to tell you. I tell everyone, okay, it's not just your credit score that we're looking at. Yes, credit score is a very important factor. And the credit score we're looking at is your median score. So it's the one that's in the middle. So there's three scores. We're going to pick the one that's in the middle to use for qualifying purposes. But there's more to it than that. We are looking at things that are on your credits. We're looking at your late payments. We're looking at how many late payments you have. We're looking at the types of installment loans you have versus credit cards and revolving debt. And we're putting that all together and compiling it to create like a credit rating almost, or a credit comfort level. Now, most of this is automated. Okay, so it's going to analyze data for us. But just so you know, it's not just the score. You can't say, oh, I'm at a 620. I should be able to get a mortgage. It's not like that. We got to look deeper into the actual credit report. That's why we have to pull a credit report so we can see what's on there and if there's anything that could potentially affect you getting a mortgage. Now, the second thing we're looking at, your income, okay, that's your capacity to afford the home. Now, what we're looking at for income is we're looking at consistency. We have to determine if it's highly likely that this income is to continue over the next 3 years. That's really hard to comprehend, right? Like you can get fired tomorrow. You don't know. However, what we look at is, okay, how long have you been at your current job? Are there any employment gaps? Are you hourly, salary, things like that? All goes into creating your income and the likelihood for it to continue. Okay. The next thing we look at are your assets. Okay. Your capital. We look at your capital and say, okay, how much do you have to put down? How much of the money is your money compared to a gift? And are you going to have reserves? Okay. Reserves are the amount of money you have left after you purchase a home. And they equate that to how many mortgage payments do you have in the reserves. So if you're buying a home and you're going to have $1 left in your checking account, that's a higher risk. It doesn't mean you won't get a mortgage. Not saying that at all. I'm just saying it's one of the things we look at. Preferably, we like to see that you're going to have money left over to buy a cheeseburger or have some sort of support in your savings. Okay. We don't want to wipe you out. Our goal when we're doing a mortgage is not to wipe you clean. That does no one any good. We want everyone to have financial success in owning a home. Okay. Now, factors in your assets like getting a grant, getting a gift, getting anything, any money that's not your money that's sitting in your account for at least 2 months, that's a higher risk. Okay. So if you have a very low credit score and you're getting a gift and none of the money you're using to buy the house is coming from you, your file might get more scrutiny than a file that's not. Okay. That where they're using their own money to purchase the home and not using a grant. So keep that in mind. It's not to say you're not going to get a mortgage, but they may ask for more documentation. They may want to see more things. May want to see that you have a rental history, things like that. So the requirements for a mortgage, it's all hit and miss because there's no right or wrong. Okay. We're looking at those four categories. And if there's any weakness in those categories, we may just require more documentation. We may require different things. So again, just like interest rate, your requirements are going to be different depending on the person who's getting a mortgage. The best thing I can suggest is have the conversation with their mortgage rep. Let's talk. Let's take the application. Let's take a look at where you're at right now and to see if we need to work on any of those four categories. You might be surprised. So give me a call, drop me a question in the comments or DM me. I'm always here to help answer any of your mortgage questions.